Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Thursday, April 30th edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick with you for the final day of what will likely be the best month for the market in like 46 years. So we've got a lot of earnings on our radar. It is probably the biggest earnings day of the quarter. So we'll cover as many of those as we can. Microsoft, Facebook, Tesla, Twitter. We have a couple other headlines as well, but earnings will dominate. We also have jobless claims at 8:30, and we'll be joined by Marc Chaikin at 8:15. Joel, give us a quick recap in the overnight session here.
You know what? I'm going to be a quick recap here because we got a lot to cover. Pre-market high 29.65. That was above the fluff 5 p.m. high of 59.75. So really important level up there for us to clear on the upside. Just hanging at the pre-market low of 29.20 at 29.21 and a quarter. Support down at the intraday low from yesterday at 02 and a quarter. Trump helping crude up $1.96 at 21.08.
Okay, then.
Gold up $17 at 17.30.40. Silver up 34.5 cents at 15.66. And Bitcoin did trade up to 9,560 last night, but it's only up $135 here at 8,960.
And Bitcoin, don't forget, there is a halvening coming up in May. Every 4 years, there's.
Is that a word? Halvening?
Yes, there are. It's part of the crypto lexicon. But every 4 years, the amount of Bitcoin that you get as a reward for mining a block on the chain gets cut in half to keep inflation in check. So there is a halvening coming up in May. That is why Bitcoin has run up here.
So is halvening like hodl, or is halvening an actual word that's in the English dictionary?
No. Well,
you're the English guy. I'm the trader, so I didn't do that well in English. So actually,
I don't know if it's in the dictionary, but it is. It is
halvening, hodling. They got their own language. They're going to take over the world with their currency. They're going to take over the world with their language too. So we might as well add it to our vocabulary, because eventually, when Bitcoin rules the world, we'll have to talk halvenings and hodls. So
wait, Dennis, wasn't French your primary language in school?
Yeah. I took French to grade 9, and I can remember this. So I despised, I actually just hated French class, hated it. And I went to, I went to grade 9, and I did all advanced courses, and I was in advanced French for the first week, and I'm like, I don't like this at all. I'm going down to general. And I remember the guidance counselor, they had a talk with me because I was a pretty good student. And they're like, oh, you don't want any general credits, just do your advanced grade 9. You only have to do 1 year in Canada of grade 9 French. Just do your advanced, because you don't want any general credits, because universities don't like seeing general credits anywhere on your transcript. I'm like, I'll take my chances. I'm going down to general French. So we're down to general French. Had no trouble. The universities didn't care that I had grade 9 general. So I did not like general French. So in Canada, they have advanced and general, and then basic classes, 3 different levels depending on how good you were. At least that's the way they did 25 years ago. So anyways, I did not do well in French at all. Never liked French.
Quick story. I took French starting in 7th or 8th grade.
You probably speak more French than me then.
But listen to this.
Oh, me too.
The reason I did it is because if you took 4 years, didn't even have to take an entrance test at Michigan. You didn't even have to touch a language. So I took the 4 years all the way through high school.
French is hard.
But I got through it, and I got through it, and so I never had to take any languages in Michigan, and they were hard. I would not have done well. I probably know less French for anybody that took 4 years of French.
You just got
I can't remember anything. I love.
Bonjour.
Yeah, bonjour. But let's go to stocks. We got a lot of stocks to cover here.
Stocks are our second language here.
Okay, let's go. Who do you want to do? Facebook, Twitter,
Well,
Amazon,
let's talk
Facebook?
Facebook because it's just so interesting. And I want to just talk the overall markets with it, because when you look here and you see, holy cow, Facebook's up 16 points. Microsoft, these are the big guns, was trading up a lot more last night. It has leaked some of the gains. Tesla was up and still is up significantly. You're like, how in the hell is the market down? I mean, and we were up last night, but the big three that reported last night all beat Qualcomm too. Qualcomm trading higher. So you kind of go through the list and you're like, man, and then you see, well, the press conference for oil was pretty good. Or the press conference of Trump, where he was talking about helping the oil stocks. So you have some oil stocks trading higher, and you're like, how in the hell are we trading down? But I'm going to tell you how we're trading down. I'm going to tell you in a minute. But let's go to the Facebook report.
Yeah, so the Facebook numbers were all in all pretty good, and they had some commentary on the call that was important. So their Q1 numbers, EPS $1.71 versus $1.74 estimate, slight miss on that. Sales beat though, 17.7 versus $17.4 billion. Daily active users up 11% year over year. Monthly active users up 10%. And then on the call, they said the same thing that Google said, which was that they see signs of stability in the advertising business in April. And we know they make the bulk of their revenues from digital ads. So that was a welcome thing to hear.
I was wrong about this one because I had this in my long-term portfolio and I sold it when it got back up. I thought it was failing at 180. You can see when it went up back up there, and then it didn't make a new high. And then it actually went down the next day. So I sold it, if you look at the candle, on April the 20th, because I felt like it wasn't going to make a new high. I felt like it was failing right around when I thought the market might fail to 50% retracement too. And I sold it, and the stock went down the next day over 10 bucks. And I was like, oh, thank goodness I got out. Well, that was the buying opportunity, because obviously we're significantly higher than that now. We are only 3% away from all-time highs for Facebook. Yes, that is correct, which is absolutely, I guess it's a little bit further than that now, because it was 215 last night, it's 210, so say 4 or 5% away. But absolutely incredible that this stock has gotten back almost its entire losses from the COVID crash. Very impressive moves. If you're buying it now, you're way late to the party, in my opinion. Yes, there's could still be a little bit of upside. And yes, if you think this market's going to go higher, stocks like Facebook are probably going to go higher too. But holy cow, chase. People are chasing this last night, chasing it this morning. I'm not chasing it.
Spencer and I were talking about this on the pre-market show. The majority of the quarter was normal circumstances, and then we went into pandemic mode, and people were in their house, and they were in their house on Facebook, on Twitter, using these medians. So you look at the results, and the whole quarter was not under quarantine, so they're reflecting some good news here. Pre-market high 217.26, and you've backed off now. This is setting up really nice here, because you've come back and you found someone that absolutely loves this thing around 210, 209.60 to 210. So it's hanging there. I'll say bulls win. You hold 210. You run up and test that pre-market high. I just couldn't tell you an exit point. If we don't hold this 210 area, if I was long at 210, risk 50 cents, then you're almost likely to get bumped. But right now, I don't even know if there was a daily high there, little gap fill we have. But to me, 210 looks like the level of control here in Facebook. We'll check on it at the end of the show.
Let's put Twitter with it. Twitter getting a nice pop on its earnings. It is leaking the gains back to full disclosure. I am long Twitter. One stock that I did right. I actually got it near the bottom, the second dip, I believe around 23.5. So I'm up almost 40% in this thing in the better part of a month. I don't know. 35 is where I was thinking eventually could get. I almost got there in the pre-market. Where'd it get to?
It did get over 35.
I should have my order out there.
Yeah, just like you did your
Gilead. Although Gilead's come all the way back up.
35.50 is where you got. Full disclosure, I bought this thing back at $17 back in 2017. I wanted to buy it. I wanted to sell it. I wanted to buy more. I wanted to sell it, short it. I don't know. I'll just hold on to it. I really don't have, it's not a large position, so I'm just sticking with it. Short term, That was a nice pop, and I don't like the drop. I'll look at yesterday's range, and I'll use that as parameters in the stock. As long as we hold above 31.50, that's the high of yesterday's range, then I think, shorts would want to try and bring in if we come to that area. You break below that 31.50, not much in there. 2-day close 28.27. On the upside, man, I haven't looked at this chart in a long time. Maybe if you get it going to the upside, you might get a look at 33.46. That's what I would look ahead of the pre-market high. That was a high in the stock as it was coming down in March. So there's a target for you in Twitter.
Definitely leaking the gains here, though. And again, it's just maybe a little bit of buyer exhaustion in a few of these stocks, like the quarters maybe are okay. But I mean, at a certain point here, we've been really ripping. I still think we could go to 3,000. I'm a little concerned with the trading action today that we're up significantly last night and we turned around and went red, and they were slamming a lot of different stocks. So it's going to be a big 830 number here today too. It's the end of the month as well, so that can always have an influence on stocks. Big numbers tonight from Apple and Amazon. So there's so much information to come into this market that it's very difficult to make a technical call here. I said on the show a few days ago.
Someone just came in and whacked Twitter here. We just lost 60 cents.
Well, I know they've been whacking at the whole. It rallied initially on the number, and they've been whacking at the entire pre-market. It looks like it's going to go red. So, which it just actually is trying to go red.
Just for a second there.
It's going red. It's going red right now.
What are you guys doing out there? Okay,
they're slamming Twitter here right now. I mean, I'm still long it. I'm going to probably stick with it, but it would have been nice to get out 35. I think if it gets stuck at 35 again, I sell it. But that is what it is. I didn't get on the pre-market. I was sleeping. Well, I wasn't sleeping, but I was trading other things. All right. Then do Microsoft, and then we're going to talk overall market.
Yep, the big gun here, Microsoft. They said something interesting. They said that all in all, the coronavirus has had a minimal impact on their revenues here. So Q3 EPS $1.40 versus $1.26 estimate. Sales of $35 billion versus a $33.6 billion estimate. So they beat on both the top and bottom line for the quarter. As far as Microsoft Teams, I've been watching that. They now have 75 million daily active users on that platform. That's their Slack/Zoom competitor, I guess. And they gave some guidance on the conference call, I believe, but I don't have it in front of me right now. I apologize. But they did. The biggest sentiment was that the COVID-19, and this is a direct quote. I'll read it for you. In the third quarter of fiscal year 2020, COVID-19 had a minimal net impact on total company revenue. So
it's all big. Again, same story here. We're leaking. So how high did we get in the pre-market or after hours there last night, Joel?
And Mr. Softy, we same scenario. You got a nice burst up to 186.52.
Holy mackerel. That's right near the all-time highs.
I know.
People coming in and buying these things up 190.70. So you're talking $4 from the all-time high. I mean, yes, it's had a minimal impact there, but there's still going to be some impacts going forward from this. So I find it very hard to buy a stock making a new all-time high here right now. And maybe, maybe that's always the way you should be buying strength and selling weakness. We know that's always worked. But in this case here, I own Microsoft. So I'm talking a little bit against my book. But, I almost think I obviously should have rang the register last night at 185 or 186. It's had a big run. I mean, I bought this at 151 3 weeks ago. I think it was 3 weeks ago I bought this thing. So you're talking about a move of 35 points on a huge market cap stock from 150, a 25% move here in 3 weeks. You're buying it now and you're putting the stuff in your investment portfolio late to the party again. So there is stocks, and we saw this yesterday, and the rotation was just incredible yesterday, where you saw really, some of the leaders were laggards, but the laggards were just like getting bought left, right, and center. They were buying airlines like they were going out of style yesterday. They were buying cruise lines like this is it. We've got to own everything. They were really just like shorts were throwing in the towel left, right, and center on everything yesterday. And you saw that happen again last night. But what happened here this morning? A little bit of a reversal. So again, you've got to always be changing your opinion on the fly here, but I look at the 295 SPY now and I think maybe we're not going to 300. I don't like the candle today. I'm not shorting anything. I think, because I said on the show the last, 3 days, I thought we were going to eventually 3,000 S&P. I think we could still, but it's not going to be smooth sailing. And, you know, when you saw the Facebook, Microsoft earnings last night, just everything flying higher, and then they were starting to buy everything else, you thought, okay, it's going to be one of those days. Tomorrow we're going to go to 3,000, but not so fast. And they pull the rug out from underneath the longs, and now you're seeing a significant sell-off in a lot of stocks this morning. There's a lot of stuff that's trading red. The banks are getting hit pretty hard here. Europe is a little bit of a mess this morning. The European stocks, the banks are down significantly too. They've been on a hell of a run. So this is a little bit of profit taking probably from the bulls. I mean, we've had an incredible run in a lot of stocks, even the banks. The banks were beat up, but they've had a pretty good 3-day move here. So, you know, JP Morgan from $90 to $100 in 3 days. Maybe it's time to take some profit.
Twitter red by $1.23, $1.11 here, $1.27. What happened there? What happened?
It's just people are taking profits. It's had a hell of a run too. I mean, I don't know if something was said on the conference call or if the conference call is even going on, if this is just technical, but you know, people are just like, go buy. They buy it up to $34, $35. Don't chase. People, traders, I say it every day. You're chasing stocks. It's the first thing I learned back, you know, in the first 6 months. Okay, my trading career, take you back to 1999 because I feel like people can learn from stuff like this. Started in 1999 at Bright Trading, May of 1999. The first, you know, few weeks, I'm just chasing stocks. I'm like, oh, I'm getting in this, I'm getting in that. I'm chasing. I'm losing. I'm like, oh, this one's going. I better buy this one. Oh, this one's going up. I better buy this one. What did I learn the hard way? That when I'm chasing stocks, I get burned. And, you know, so what I said was, you know, and I've used this analogy a lot of times, when the train is rolling down the tracks and you try to jump on the side of it, a lot of times you fall under the tracks. Sometimes you don't. Sometimes you can grab something and go along for the ride, but for the most part, you fall under the tracks. The time to make the trade is when we're in consolidation station, when it's paused for a second. Train has stopped. Now it's looking to turn higher or it's looking to turn lower. That's the striking time. You're coming in this morning and you're buying Twitter up $4. You are jumping on a moving train and you've got run over hard here this morning.
How many losers did you have in a row?
19 in a row. My second week of trading at Bright Trading, I lost on 19 consecutive trades. That is impressive to do because you think about it.
And that's during the dot-com bubble too. That's when everything's going up.
Yeah, 1999, everything's going up. But, you know, but we were both sides. I was always, you know, I like the short side even when I first started at Bright Trading. I remember you saying that to me, Joel. You're like, you're kind of the weirdest retail trader. You come in, but you love shorting stocks. It's like most retail guys come in and they just buy stocks. But, you know, you like shorting stocks too much. But anyways, that is the side story. 19 trades I lost on in a row. I'm like, I really suck at this. But you know what? You know, and you've got to be like doing something mechanically wrong to get on 19 trades in a row. Because you think about, you know, what's the odds of, you know, going onto a roulette wheel and betting on red and then betting on black and betting and getting it wrong 19 times in a row? It's not the statistics behind that are not very high.
All right, Dennis, can I interrupt you for a second? I just want to bring on our guest and get Marc's thoughts on this. Marc Chaikin is the founder
19 losses in a row?
Not the 19 losses in a row, but what you were saying before that about the rotation and the chasing. So I'll bring Marc on here. Marc, good morning.
Good morning. How are you?
We're hanging in there. Do you have thoughts? I don't know if you have thoughts on Dennis's massive losing streak to start his career, but do you have thoughts on what we're seeing here in this market and just the relentless buying going on out there?
Well, having listened to the conversation for the last 10 minutes, I would say that there aren't people buying this market. Machines are buying this market.
Well, that too.
Except for day traders. But
there's a lot of Robinhood traders. There's a lot of retail traders that are like jumping and bouncing around in here too, and probably getting chopped up a bit. But you're right. Now, the bulk of the volume is machines for sure.
Yeah, and I agree with you that we could get to 3,000. You usually get some early month strength with pension fund money coming in or programs like the CTA type programs driving the market. And yesterday's strength above 29.05 on a closing basis pushed the CTA models into bullish territory. And these are the models that, you know, tend to rebalance once a month. They're either long or short momentum, and they're in long mode. And I think we're seeing some of that in some of the explosions in the big cap names in the S&P.
What are your thoughts here with today's price? Today's pricing action concerns me a little bit because we were up significantly last night. We saw Facebook ripping higher. Microsoft was significantly higher, having difficulty holding the gains. I mean, Microsoft's only up $2 after being up $8 last night. You look at Facebook and, you know, it's leaked some too. It was up another 10 from where it is. So it's leaked back a significant amount of the gains. Twitter was up huge this morning and has actually turned to the red. I look at this and I think, man, there's some people taking profits out here on these spikes. Which makes me a little bit concerned that this market might start to teeter again. Thoughts?
Well, I think you're right. And up until this week, earnings season has been very benign. Analysts had lowered their estimates coming in, no surprise there. And even companies that missed on estimates were not punished, but the companies that exceeded did very well. I think what you're seeing now is there are real sellers coming in. So I think the selling is being done by humans here, not by machines. These are people who are either long the stock, sophisticated investors or traders who rode out the storm, if you will, who see these as a sell on the news opportunity in these big cap names. And there's been an awful lot of good news in the market in terms of drug treatments, potentially in terms of the economy reopening. So I think smart money is probably getting out here, and your your trepidation is probably well founded.
You know, and it's just the fact, like I look and, you know, even on Microsoft, and obviously I probably should have sold it last night because it's down, you know, significantly from where it was. But I mean, I bought the stock at $151 3 weeks ago. I mean, it got up to 186 here after hours. I mean, are we really at a point where the mega caps should now be, besides Amazon, because we know their business is, you know, built for even a COVID environment, but are we really at a point here where the mega caps should be making new all-time highs? Or trying to?
I don't think so. I mean, if you let's use 3,000 and take Goldman Sachs straw man of $110 earnings for the S&P, that would put the market at about a 28 multiple. And granted, everybody has written off 2020. So the bet here is that 2021 sees earnings come back to the 2019 level. If it takes until 2022, then paying 28 times earnings. Remember, the economy was, the consumer and the economy was slowing down. Inventory accumulation, capital expenditures was soft in the fourth quarter. So I think if you're taking the long view, you say, well, this has still been a bear market rally. It's made a lot of traders rich if they were on the right side of this. The hedge funds were not. They were short. But I'll give you an anecdote, and maybe you can riff on this. I have a great construction manager up here in Roxbury, Connecticut. But he's a fairly sophisticated guy, can do anything with his hands. And he's been asking me for the last 4 weeks, Mark, what do you think about the market here? Has it bottomed out? What do you think? I've told him, you know, that I thought this was a bear market rally, and odds are with the uncertainties we'd go lower. So yesterday he came to put some chairs together for my deck. And he said, boy, I've got some really big gains in Carnival Cruise Lines and Royal Caribbean. I'm really happy here. I said, you must be up about 100%. He said, I am, roughly 95%. So is this the shoe shine boy giving JP Morgan a stock tip, on Lower Broadway in 1928? I don't know, but you have to wonder about people who just blindly stepped into the breach, and more credit to them, did better in this trading account than I did.
I mean, blindly buying the dip and the fear of all of this stuff worked. It worked again.
But look what he bought. It's not like he bought
Microsoft, and he bought the worst stuff. And it's been the best. I know. He bought Ground Zero or Water Zero and went with the cruise line. But I mean, it worked. It worked again. Like, I obviously didn't work, if you were early on the trade. I mean, if you were buying that dip on RCL when it went to 100 or 80 or 60, but after, March, any really, dip buying did work. I don't know where we go from here. I mean, from a logical perspective, I think about all this stuff and I think, like, how in the hell, are these stocks coming back to where they were? But then, you think, well, maybe we're getting past this. You try to apply logic, but then I said, screw it. I'm taking my logical hat, just throwing it out the window, because this market isn't trading on logic anymore. It's trading on fear, and it's trading on the fear of missing out. And until that fear of missing out becomes the fear of loss again, the market could continue to go higher. So I've had trouble, a struggle, because my logic says sell everything. we've gotten all these rallies back, and I don't think we're nearly out of the woods on this COVID stuff, but the technical hat says, man, we're squeezing the hell out of the shorts.
Yeah, I mean, you've got to have a breakdown level. I agree with you. You've got to have a breakdown level where you say, okay, the rally is rolled over. But I think if you key in on two groups, the airlines and the banks, you get a different picture than the one we've been painting and that you've been talking about this morning. The banks look like holy hell. You look at Wells Fargo, the worst managed bank, butchered the PPP loan situation. We know that because we bank with Wells at Chaikin. But even if you look at JP Morgan, Citi, and Bank of America, they're down at the bottom of the page, struggling to rally. And the airlines, even though they've had big percentage moves, are awful. So I think, what does that tell you? Well, it tells you that the new normal is not as pretty as this current rally would suggest it is.
So, Mark, what's on your radar here as we are about 3.5 minutes away from the latest initial jobless claims data? What stocks are you watching, or what sectors are you watching?
I'm watching the pullback in the biotech stocks. I think that there's some real opportunities over the next week or so. You've had Regeneron come down from a peak. Vertex reported very strong earnings last night. The stock is up very nicely, but it's still below its highs. I'm watching Biogen, which got slammed after a great earnings report last week because their Alzheimer's drug is in sort of limbo, but they have 3 or 4 Alzheimer's drugs, and it's always paid to buy Biogen on weakness based on one drug, and they've had it more than once. Basically, the whole Alzheimer's story is the juice behind Biogen. So I'm watching the biotechs. I'm also looking for opportunities to sell some of the apparel stocks like PVH and Ralph Lauren. I just think they've gone too far too fast in an economy where the stores are still closed. Interesting with the employment numbers, two things. A, the government's downplaying the actual unemployment rate. They're going to call it 5%. It's really 15% if we get another 3.5 million claims. And B, every time a day since March 23rd, the market has rallied on the Thursday that the unemployment claims have come out. So
Sure has.
let's see
Every
if we
time.
can, if we break the trend this time, that may be a clue that 3,000 level is going to be hard to penetrate.
And some of the apparels didn't like that trash didn't rally yesterday. A lot of retail did not rally yesterday. So I thought that was interesting that they didn't rally with the rest of the dogs in the market. But how do you approach Gilead here?
Oh, Gilead's biotech has always been a long-term investment for me. It's never been easy to trade these stocks because they ebb and flow on the FDA and so forth. But I mean, Gilead was a good company that had a very short pipeline, and that's why basically why the stock sold down. Obviously, well, they're talking about not charging for Remdesivir.
Remdesivir?
Right? Yeah, there's talk that they're not going to charge for it. At least that's what Kramer was saying yesterday. So, that's a nice to have for company credibility, but are they really going to get paid for it?
All right, under a minute here.
Yeah, Dennis, are you you prepared here? You going wide on your markets?
Yeah, I'm going wide.
All right, so
we'll see what happens.
So as Mark was saying, the estimate is for 3.5 million jobless claims filed last week. That would bring the
higher the better.
The 5-week total to a little over 30 million. But let's see what we get here.
Higher the better. Higher the better. Just remember that. The higher the number is, the better it is for the market. That's the way it's been reacting. It's popped the last few times, and I think it sustained those rallies during the day. But
it did, Joel.
Yep. So that we'll see what Mr. Market's dialing up for us here with the jobless claims number moments away.
Futures within 3 points of their pre-market lows. So.
Yeah, just hanging out here. If we do get a rally, I'd like to see what happens at that close. We are getting a little bit of a rally.
There we go. Sorry, my internet froze out there for a second. So the actual number is 3.8 million, so a little higher than the estimate now. So just to recap the past few weeks here, dating back to the middle of March, the last 6 readings are now 3.3 million, 6.8 million, 6.6 million, 5.2 million, 4.4 million, and now 3.8 million. So at least we're getting down. At least the rate is falling. But these are still astronomical numbers here.
You know, at this rate, there's going to be effectively 20% unemployment by the end of May. Dennis, you know, hit on a key point. It's pretty amazing that this market, particularly the NASDAQ, trading up near new all-time highs with 20% unemployment. There's a huge leap of faith going on. God bless the people who are long and enjoying this, but it's too easy, guys. It's just too easy.
That I've been saying, but I've been trying not to think too much the past couple of weeks, because when I think, I get in trouble. So
yeah, personal income down 2% versus 1.3% estimate. We did get a pop, but it wasn't like the pop that we got the last few numbers. Now we're still trying here. It's still a rally, but you know, it's just kind of have no levels here. But it just seems like, yeah, we're rallying, but they're sellers. You know what I mean? That they're running into some bigger offers. I'm not looking at the books and anything, but it just seems like I'm trying to rally, but there's a seller. I'm trying to rally because I thought the way the thing we ripped over the last couple numbers, I thought we were going to rip up to like 29.40. High close of the move now is going to be my focus number for the rest of the week, 29.41. But so far, we haven't come near that level. Marc, before we let you go, let's just talk, oil here. And, we had the big negativity, the May going, July, nice rally here, bringing along some of the oil stocks with it. ExxonMobil, Chevron having excellent days yesterday. Give us any thoughts on this sector. I know it's probably your long-term numbers are not that great on it, but shorter term, is it good for a trade?
I think the key to this sector are the dividends. Royal Dutch cut the dividend by 75% last night. ExxonMobil's maintaining the dividend. We'll see how long that goes on. But I think the oil stocks with the dividends like Chevron and ExxonMobil are the only place to be. The smaller producers are vulnerable and bankruptcies are going to be coming. That's also part of the reason the banks are trading so poorly, because they're exposed to some of that debt in addition to consumer debt. So, I think if you look at unemployment and oil, you get a totally different picture than you do looking at the big averages with the domination of Apple, Amazon, Microsoft, and so forth. So be interesting to see if Amazon can hold its gains or if it's a sell on the news opportunity when they report.
Marc Chaikin is the founder of Chaikin Analytics, joins us every other week. Marc, as always, thanks for the time, and we'll talk to you again in a couple weeks.
In 2 weeks, yep. Be good, guys.
All right, be safe out there. All right, I want to get to Tesla here. Just before we get too late in the show, I want to bring up their earnings. I'll give you the numbers. The EPS for Tesla was $1.24. That is heavily adjusted. You cannot compare that to a 36-cent loss estimate. So throw that out the window. $1.24 adjusted EPS. Sales more comparable, 5.98 versus $5.9 billion. They talked about, they're going to revisit their outlook next quarter. Talked about, hey, they actually made a profit, net income of $16 million, which is encouraging. We knew their deliveries from a few weeks ago. They delivered, what was the number? 70. Just had it here. 70. Had it in front of me and then I lost it. I apologize. They'd already announced their deliveries for the quarter. 88,000 cars last quarter is what they delivered. The numbers from Tesla were encouraging. The fact that they made a profit, but all anyone's going to want to talk about is what Elon said on the call, which is just saying what he has to say to keep his company in business, I guess. But he was, to put it lightly, not not for an economic shutdown.
What did he say? So could you say what did he say?
What did he
exactly
say? He
Yeah.
called the current economic shutdown fascist. He wants their factories open like last week. It's funny because it's the tale of two CEOs, right? Because
Yeah.
Mark Zuckerberg on his call said that he's afraid that we're going to reopen the economies too early, and it's going to cause the virus to pick up speed again. And Elon Musk took the exact opposite tone, where he's saying, "Oh no, open it now. We need to open it right now." And I can understand why he would say that, because his company is bleeding here, and he's got to stop the bleeding somehow. So I can sympathize with why he would say that. But he was doing so well when he was keeping his mouth shut. He was doing so well.
I've got, you want to hear my theory on this? So just take away from the markets for 3 minutes. So I've got a theory. And this is kind of, just from analysis. So you have basically the population is divided into thirds right now. You have a third of people like me, and Joel's probably in that group, and Zuckerberg maybe, who are scared. And we want to stay, in the lockdown for as long as it takes to minimize the spread and get rid of the virus. Then you have a third of the population that's on the opposite end of the spectrum. They think this is way overblown. They think this isn't much worse than the flu. And why don't we just reopen everything and get back to our normal course of business? Nobody likes being this. That covers everyone. But that third of the population really doesn't like this. They don't like their freedoms being taken away, and they want to go back to work. And then you have another third of the population that's kind of in the middle. They're kind of like, well, I want to go out, but I don't want to get the virus, and they don't know what to do. So, and it's split into thirds. So you have Zuckerberg on one end of the spectrum. You have, obviously, Musk's going to be on the other end of the spectrum. I'm with Zuckerberg, but then there's a lot of people, Christian Frommertz has been one, and, Christian listens to the show, and, he's been saying open it up. So, I mean, there's so many opinions on this. And when you have these clashing of opinions, and we know we've had it in our chat, I've had it with fights with Twitter, when you get one person who's on the one side that says we need to reopen, and Nick Chaikin has said we need to reopen, so he's been on the other side too. And these are all smart people. It's not like, there's dumb people, smart people. It's just such a divided subject. But the people who are in the one third and the other third really battle. And I've had some battles with Twitter on Twitter too, saying I think we need to keep it shut down. But I mean, it's at a point where it's hard. People are going to have their opinions, and you're not going to change them. So, if I'm trying to come on here, and I used to say and advocate, we need to lock down, and I would advocate a lot, I was just pissing a lot of people off. So those people who are in that third of the group aren't going to change their opinion. They're going to stick, with that. We need to reopen the economy and, start, getting the life back to normal. And the other third who are a little scared, you're not going to change their opinion either. So you know what? I'm just trying to ignore the opinions altogether, because it's leaving, because I don't want to get in fights with everybody about it. I mean, everybody's entitled to their opinion, and we try to do our best. I'm of the opinion I think we do need to continue to lock down, because I don't want to go back into lockdown.
Yeah, and you can understand why Elon would. I don't know if I agree with his tact and his tone, but you can understand why he would really, really want to get things reopened, because we don't know if they can take a full quarter of this, right? I mean, 1 month is hard, 2 months are hard enough. But
I just and you're right, but I just get scared that we open up too soon. I'm with Zuckerberg, and we open up too soon, and then all of a sudden everybody starts getting sick again. We got to go back and
right. That's the argument.
That's like a worst case scenario.
Saying, right. I'm just saying you can understand. Although I don't know if I agree with Elon's tone in calling it's not. I don't think it's fascist, but you can understand the fear, because you just don't know if a company like that can survive an entire quarter with no production. Right. So that's the point. So anyway, Tesla's numbers were by and large pretty good, and it's reflected in the stock this morning. Like I said, they made a profit last quarter. They're still on track. They have the capacity, he said, to deliver the cars they said they were going to deliver. It's just a question of, are they going to be allowed to do that? But the stock is up here this morning, and we're hovering around 860.
I mean, you can't trade logically. You can't think about logic here at all. It's momentum, it's squeezing, it's a story. It's still got the story intact, and you just got to trade it off of that. With that being said, you're back up to where you were. I mean, we've went up. If you're buying it now and sticking this in your long-term portfolio, you're doing it backwards. The thing was $360 a month ago, month and a half, not even, just over a month ago, month and a half ago, $350. Now it's $850. So you're buying it now and you're sticking your line, like putting the investing hat on. You can trade anything, but even as a trader here, I got to think you're going to start to run into some resistance up at this 900 and 920 and 930 where we ran into resistance before. Old resistance becomes new resistance when you get back to that point. So I don't think we're just going to fly right through that area. So if you're coming in here buying now, I think you're late to the party. And I've watched what's happened with Facebook, the failure that they've kind of had this morning. You know, they were trying to get up there. What was the high in Facebook, Joel? Trying to make a case here. What was the high after hours high on Facebook?
Let me go to
217.26.
Right near 220. So failing right where we were back in February. Microsoft, same thing. You know, got $3 or $4 within the high. Tesla's within 40 bucks of the 900 where it failed before. You know what? I just watched Facebook fail or starting to pull in. We don't know for sure, but it's pulled significantly off of where those highs were. I watched Twitter completely reverse. I watched Microsoft. So I'm like, fool me once, shame on you. Fool me twice, shame on me. I mean, I would not be buying Tesla up $60 here on these numbers for the simple reason I just watched a lot of other big caps reverse off of these former, or when they got near these former resistance levels. So just as a technical trader, I'd be booking profits in Tesla.
Took the words right out of my mouth here as far as Tesla goes. You have the exact same setup that you had when we were talking about Twitter and Facebook. You have the high, I believe is 881. You have the support, and then you just kind of have the leakage here. And as I talked about, you know, not wanting to be long Facebook under 210 because there was nowhere to go. Same about that high 3150 that you had in Twitter. Twitter now in the red by just about $2. Same here with Tesla. I mean, you're holding. I mean, who wants to buy this thing at 855? Go right ahead. Where's your out if it doesn't hold 855? And then I think you just have a little bit of supply, you know, building up here. So I'm on the same side as you with that, Dennis. I'm a little disappointed. I really thought we were going to rally off that jobless claims number. I guess it wasn't high enough. We went down and made a new low for the pre-market session. So we're kind of in no man's land here, starting to lose some momentum.
People are taking profits today.
Yeah, it
it's
sure
a profit
like
taking Thursday. And maybe it turns around and they start to rip them higher here again, but there's definitely some bulls that are taking some profits here. We got up near 3,000. We didn't quite get to it last night where we got up to about 295 and change on SPY. Was it 296? I might have even saw 296 last night briefly. But, you know, so we got it within the realm.
Yeah, the SPOOs got to 29.65. Boy, you had a fluff 415 to 5. You know, Dennis, obviously you saw that reflected in the Spiders price.
Yeah.
But boy, oh boy, they were just buying that SPOOs hand over fist. In fact, we closed, the cash close was 41 even. Your last after hours print was 58.50. So they baked in another 17 handles worth of gains there between 4:30 and 5. You did, I think that 29.65 high. When did you get that? You know what? The Spiders were closed. You hit that 29.65 just after midnight. So you had to be a midnight trader to catch that one. Your 4 a.m. traders, your Spider traders, it never even got over 20, barely got over 29.50 since they reopened. Back over my daily level for, you know, the daily pivot, 29.20, trying to muster a rally here. Let's move on. It's 8:44. We still got a lot of earnings reports to cover. You want to do Qualcomm? Because that's faded too. Boy,
they all faded. It's a theme. It's the theme.
Go ahead. Qualcomm.
All right, let me get you the numbers here for Qualcomm. Yesterday after the close, Q2 adjusted EPS 88 cents versus a 78 cent estimate. So a nice beat there. Sales 5.2 versus $5.0 billion. So a beat for Qualcomm in the second quarter. They gave guidance, which is nice to see. They gave Q3 EPS guidance. They gave a range of 60 to 80 cents per share, which is in line with the estimate. And the sales guidance they gave was also in line at $4.4 to $5.2 billion. So in line guidance for Q3 and the Q2 earnings and sales beats for Qualcomm.
I own it in the long-term portfolio still. I'm going to stick with it. Like I said, this was one I bought when it was in the gutter. I think I was paid like 62 or 63 bucks. So it was one of the first ones that I bought when I was like uncomfortably in cash. And I was like, I need to get some cash to work. So I'm up significantly in it. I mean, again, though, they're coming in now. It's like, okay, this is 60 bucks a month and a half ago. Now it's 82. Now it's got all of its losses back from February. It's not cheap anymore. You know, that's the problem, is that a lot of the stocks just aren't cheap. So time to book some profits, maybe, and people are doing that in Qualcomm too. I'm probably going to stick with some of these stocks, but again, I can't argue with you if you want to book some profits here. They've been big moves.
Yeah, pop up to 84. Do I see an 8? No, 83.01. That was after the
Big
headline
moves.
number.
Squeezing the hell out of the shorts last night on all of these stocks. And Twitter this morning, squeezing the hell out of them. And the shorts are just like, what did we just do? We just bought the top. They did.
And same formation here. You've backed off. Could not hold that 8 p.m. close. Just hanging in here. Let's call it 79 even. Let's call that your level of control. Below 79 even. What do you got? You fall into the range, yesterday's range. And that's the close too. So that's what I keep an eye on, folks. The close and the high were very close to each other yesterday, 79 even. So holds there, yeah, maybe get back up. I don't think you're going to see that pre-market or after hours high, but 79, that had to give you that'd be the level for the day of me in Qualcomm.
What about Teladoc here? I want to cover this one because this was a hot name for a while. They missed expectations for their Q1 here. Q1 EPS, they lost 40 cents a share. The loss did narrow, but the estimate was a 36-cent loss. So they missed the estimate by 4 cents there. Sales 180 versus 178 million dollars. So they beat that number. They gave some sales guidance for the quarter and for the year. The sales guidance for Q2 was good. The sales guidance for the year was below estimate. So very mixed quarter here, mixed report for TDOC.
I set it back on the 24th. I was a day early when this was 193. I was like, I think you're getting close to this 200. I think it's time to book profits. And I just thought it was overextended. It went the next day and broke out to 200. Classic breakout over 200 to sucker in a few more longs and then the reversal. And then yesterday before that's a reversal day. I think rallies are to be sold in Teladoc. I think the story's over in the short term.
You are trading at 170 and change here. They haven't really killed it yet. Let me see what the pre-market low is. Boom, 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 boom. They did on the initial number. They took it down to 163, but they managed to bring it back. What this stock has to do for the bulls to regain control is you got to get back above 173. Your lows from the last 2 days are 72.68 and 173. Call it a double bottom. So old support, new resistance. I call that major resistance. Love to see it up there for lower risk short. That 163 doesn't hold a lot of significance to me. If you can blow through that, man, your next level support on the dailies is 156.06. But, if it regains 173, the bulls got a chance to see that close at 175.10, but feeling a little bit heavy here.
Let's jump over to Zoom because obviously the relationship has been there for a while between Teladoc and Zoom. Both of these charts, if you look at each other, have kind of been following each other, but we have bad news in Zoom here overnight. Again, the big reversal almost on the same day that Teladoc had the reversal, actually a couple days before. So I gave you a little bit of a clue. 181 was the high. We're selling off significantly here. Again, what's the headline?
Yeah, so the headline, this is from The Verge, who caught this, very eagle-eyed catch there. From The Verge, they noticed that Zoom had that blog post last week, right, where they said, we have 300 million daily active users, up from 200 million a month ago. Well, turns out they quietly edited that post. They do not have 300 million daily active users. They have 300 million people 300 million daily Zoom meeting participants. It's a key difference. A meeting participant is somebody who can be counted more than once, right? Like we can, you and I can have 5 meetings in one day. We can count that 5 times, as opposed to a daily active user, which can only be counted 1 time. So, bit of a walk back here from Zoom on their blog post. I'm gonna assume it was unintentional and not malicious. But there's a big difference between 300 million daily active users. Those are paying people who you can count 1 time, and a daily Zoom meeting participant, which you can count however many times you want.
Love the product. We've used it every day. Valuation's ridiculous. We know that. It's had a story for a while, but the story's cooling off. So when the story cools off, that's when you got to get the hell out. And I think the Zoom story has cooled off. I don't know if it's over. Not declaring out. Same thing with Teladoc. I said the story's over for the short term. stories cooled off in both of these things. So people are booking profits, and it's had an impressive run. I mean, still $138. It's had an impressive run from where it started the year at 67. It's up twice. So don't think it's because it's at 138. It can't go back to 115. It can. I don't know if it's gonna. It's been a significant sell-off now from 180 down to 138. If you're shorting it now, it's down 40 points in 4 days. So late to the party here too. I'd probably be more inclined to buy the dip here, but I don't know where to buy the dip. That's why I'm just out on it. I don't want any part of it.
Tough one here. Tough one.
Too tough.
Yep. Hanging out too close to the pre-market low of the session for me to like say, hey, you know, you got buyers stepping up. I keep an eye on a very, very close eye here. 136. That's surrounding your 2 15-minute brackets. Came down to that area another time. So either shorts trying to bring something in there at 136, or you got a true buyer. So I'll use that as support because you're up 2 1/4. The only problem is if you lose this 136, the next daily low I can give you is 125.60. So be careful there. 114 was another daily low. We know we had a bunch of lows at the 110 area. S&Ps, we're leaking bad here. We've lost about 17 handles here.
Across the board.
Yep. Just did not get that pop off the jobless claim numbers. I think that many folks were looking to sell into. We're down over 30 handles here. It looks like we're sliding into that open. Yesterday's intraday low, 29.02 1/4, 10 points away from that. Do you have selling balances, Dennis? Or
there are some buys, there's some sells. It's mixed. Nothing influential. I will say there's a few buy imbalances there, and maybe that's going to help to hold up the open a little bit to get a short on. But this looks like a reversal day to me. Like, you know, with the way the stocks were getting bought last night and to turn around here, you caught some people. You squeezed the shorts. I feel like it was the short squeeze. So I feel like actually now rally is to be sold. So trading cap is now flipped from long, you know, where I was bullish long. After seeing the reversal that we've had here this morning, I think rallies are to be sold. So if we can get out of some stocks that open up for whatever reason, you know, even like Exxon Mobil and Chevron, and a lot of these oil stocks are trading higher. Pretty good news. Exxon Mobil not cutting their dividend, but let's look. Royal Dutch Shell. This is the first time. What'd you say? Give us the news here, Spencer. Mr. Israel.
Yeah, sorry, I muted myself.
You did it again.
2 days in a row.
This is a trend all of a sudden.
The
trend is not our friend in this case.
Was my mouth moving? But all right. Anyway, RDS cut their dividend today for the first time since World War II. They cut it by here. Let me get the exact number that I had here on the Pro. Cut their dividend from 47 cents a share to 16 cents a share.
Significantly.
Yes, very significant.
Significantly cut the dividend here. This took everybody by surprise. The stock's down 10% over in European trading here. So people did not see this one coming. I'm not surprised BP is down as well. Obviously, big oil company over Europe's. Maybe they're worried the same thing. BP's got a 10% dividend here. If Royal Dutch is cutting, you know, maybe BP is going to do it too. This spooked the market. At least over in Europe, and at least the oil stocks there. Royal Dutch was up last night before this news, so this took the market by surprise. They did not expect this.
And if there were two oil companies that were thought to be like the quote-unquote safe plays, it was Chevron and this one, because
Royal Dutch,
it's for the dividend that they hadn't cut since World War II,
yeah.
and Chevron. Those were like the quote-unquote safe names in the sector. So throw RDS out the window now as far as safety. But
it's concerning. I mean, it's definitely concerning, and you're starting to get a little realization here, maybe from people who are just randomly buying, and maybe they're going to buy this dip and say, okay, well, we still got a dividend, but again, you're buying these companies for trades. If you're buying Carnival Cruise Lines yesterday, it's a trade. If you're buying oil companies, it's a trade. I'm not putting any of these things in my long-term portfolio. There's major problems with every oil company out there. There is major problems still with the cruise lines here. I know, yes, the cruises are cheap, and yes, maybe if you're going to book for next year, you know, a year out going forward, but they're not sailing right now. Yes, you know, they've had this is a short squeeze. This is a short squeeze on a lot of these stocks. Still a lot of issues. And this is just an eye opener here. People are randomly chasing stocks in the rally are like, oh, they just got hit hard, at least over in Europe this morning. Obviously, this is widely traded in Europe. by a major oil company slashing the dividend.
Yeah, I mean, that's one thing. If you're buying it for the dividend and then it gets, I don't know. I'd be very, very, very cautious on these rally and oil stocks. I mean, how long is it actually going to take to get our consumption levels back to where it was, even if like we flipped a switch tomorrow and everyone had a vaccine? So I'll just take a look. We are the secondary market here in RDS, but I mean, a lot of times you see, they get the ball rolling. Like no one wanted to do it. No one wanted to do it, right? And then, oh, well, Royal Dutch did it. So, why don't we do it too? What's the symbol on that? RD?
RDS.B or /B or .A/A. There's two share classes.
RDS.A. They both trade actively. You can kind of pick your poison.
They're both at the. I can't tell you here. They're both at the lows. I mean, if you feel like you have to own this one, take a look. You've had a nice move off the low. Just call it 19, the low. You got to what, 37, right? 38, so almost a 20-point move. So 27, 28, maybe start to get interested in this thing. Yeah.
I mean, again, why? So if you're building yourself an investment portfolio, why do you want this stuff?
I don't.
Why don't you buy, the companies that are good? And again, none of this stuff's going to. But people are, and people are thinking, oh, I'm going to throw these ones in and that one in. When you're buying dips, buy it on quality. And this is, oil sector. Royal Dutch is great company, in there, but it's in the wrong sector. Oil is just in trouble. Oil was in trouble before COVID started. And yes, oil in Royal Dutch and Chevron, probably two of the best of breed, but one of the best of breed just slashed the dividend. That's telling you there's problem in the sector. And, you look at all these oil companies that are having these ripping rallies, Halliburton up here again this morning, Schlumberger up significantly, this morning. But you look and you think, I don't know. I don't know if some of these companies, we don't know which ones are going to survive and which ones aren't going to survive. So I think this rally and all of these stocks is more of a gift, not like, I don't think Halliburton's going back to $25. I don't think Schlumberger is going back to 35, 40 bucks. I honestly don't. I think the path of least resistance is still down. Right now, it's higher, but we've seen some reversals here today. Don't kid yourself. Some of these oil names could reverse too.
Looking ahead after the close here, we're getting earnings from Amazon, from Apple, from Visa, United Airlines, Gilead, Amgen, Western Digital, MGM, U.S. Steel, Atlassian. It's going to be a big one. So a lot of big names due to report after the close today. Today is probably the biggest day of the season, of the quarter.
Very, very important day for the market. When you get these 2 days, it's between these 2 days where you have all the big names. I always had Tesla, Microsoft, Facebook last night, Twitter, McDonald's, big names here this morning. But then tonight, it's just like, boom, Apple, Amazon, Visa. I mean, your huge names reporting here tonight. These are big components in your indexes there. And the market's going to look to them for leadership. But, here we got the leadership from Facebook and Microsoft and Qualcomm and Tesla last night, and the market still rolled over. So that's an issue. So I'd be very cautious with the markets here.
Have you guys seen the video? Dana showed it to me, and it was from a while ago about people doing conference calls on like Zoom and things like that. It was even pre-Zoom, and it does the ding dong, and then it introduces people, and then people are on mute, and then people are showing up late and leaving. Have you guys seen that video yet?
No, but it sounds like our show.
Exactly. All right. Final comments from me. We're down 30 handles, and we're down 30 and a quarter handles, and looks like
20 with fair value, because remember we had the big run between.
Yeah. Okay. Go ahead.
So we're down Dennis. 20. We're down 20, but we're down. Okay. It's an issue. I mean, we had the companies all reported great numbers, and we turned around and started slamming everything. It's profit taking Thursday. That's what this is. I think It's all profit taking.
All right, that'll be a wrap for us today. Joel and I will be back with you at 3:40, as we have been for the past couple of weeks here, to talk you through or at least into the close. I want to thank our guest, Marc Chaikin. You can always catch a replay of this show on our podcast or on our YouTube channel. Please remember, all the information from our show is meant to be used as informational purposes and not for investing or trading advice. And that is all. So for a free trial of Benzinga Pro, click on the link in the description of the video. Everyone have a great rest of your day, and Joel and I will be back with you at 3:40. Until then, be safe.